Hey everyone and welcome to today's topic. Investing in the stock market has become a popular way for people to grow their wealth and plan for their financial future. One popular form of investing is through index funds, which offer a low-cost, diversified approach to investing in the stock market. However, in recent years, a new type of investment has emerged: cryptocurrency. With the rise of Bitcoin and other cryptocurrencies, many investors are wondering whether they should invest in index funds or crypto. In this comprehensive guide, we will take a closer look at index funds and crypto, comparing the pros and cons of each investment option to help you make an informed decision. What are index funds? Index funds are a type of mutual fund that tracks a stock market index, such as the S&P 500 or the Nasdaq. Instead of trying to beat the market, index funds simply aim to mirror the performance of the stock market. Investing in an index fund gives you exposure to a broad range of stocks, reducing your risk compared to investing in individual stocks. With a diverse portfolio, you are not relying on the success of a single company, but instead spreading your investment across multiple companies and industries. How do index funds work? Index funds work by buying all or a representative sample of the stocks in a stock market index. When the index goes up, so does the value of the index fund. Conversely, when the index goes down, the value of the index fund decreases. One of the key advantages of index funds is their low cost. Because they don't require active management, index fund expenses are much lower than those of actively managed mutual funds. What is cryptocurrency? Cryptocurrency is a digital or virtual currency that uses cryptography to secure and verify transactions. The first and most well-known cryptocurrency is Bitcoin, which was created in 2009. Since then, hundreds of other cryptocurrencies have emerged, each with their own unique features and characteristics. Cryptocurrencies are decentralized, meaning they are not controlled by any government or financial institution. This allows for faster, cheaper and more secure transactions compared to traditional financial systems. How do you invest in cryptocurrency? Investing in cryptocurrency involves buying and holding digital tokens, such as Bitcoin, with the hope of selling them at a higher price in the future. This can be done through a cryptocurrency exchange, such as Coinbase or Binance, where you can buy and sell cryptocurrencies. Investing in cryptocurrency is a high-risk, high-reward investment. The value of cryptocurrencies can be extremely volatile, and many investors have seen significant gains and losses. If you like the video so far and would like to support us, please like the video and subscribe to our channel, so you don't miss the newest video updates. Thank you very much. Smile and let's continue. Index funds versus crypto, the pros and cons. Now that we have a better understanding of index funds and crypto, let's take a look at the pros and cons of each investment option. Pros of index funds. Diversification. Index funds offer a low-cost, diversified approach to investing in the stock market. This reduces your risk compared to investing in individual stocks. Low-cost. Index funds are much less expensive than actively managed mutual funds, making them a cost-effective investment option. Simplicity. Index funds are easy to understand and invest in, making them a great choice for beginner investors. Consistent returns. Over the long term, index funds have shown consistent returns that match the performance of the stock market. Cons of index funds. Limited upside. The returns of index funds are limited by the performance of the stock market. This means that you won't see the same high returns as you would with individual stocks or other investment options. No control. As an index fund investor, you have no control over the stocks in your portfolio, and cannot make changes based on your personal beliefs or values. Pros of crypto. High potential returns. Cryptocurrencies have shown the potential for high returns, with some investors experiencing significant gains in a short period of time. Decentralization. Cryptocurrencies are not controlled by any government or financial institution, making them less susceptible to manipulation and offering a hedge against traditional financial systems. Innovation. The blockchain technology underlying cryptocurrencies is driving innovation in various industries, including finance, supply chain management, and cybersecurity. Cons of crypto. Volatility. The value of cryptocurrencies can be extremely volatile, with prices subject to rapid fluctuations. This can lead to significant losses for investors who are not prepared for the risks. Regulatory uncertainty. Cryptocurrencies face an uncertain regulatory environment, with governments around the world taking different approaches to their treatment. This uncertainty can impact the value and adoption of cryptocurrencies. Security risks. While blockchain technology offers a high level of security, there are still risks associated with holding and trading cryptocurrencies. Hacks and scams have resulted in the loss of funds for some investors. Both index funds and cryptocurrencies have their advantages and disadvantages, and the best choice for you will depend on your individual investment goals, risk tolerance, and personal preferences. If you prefer a low-cost, diversified, and relatively stable investment option, index funds might be the better choice for you. They offer a straightforward way to invest in the stock market and are suitable for long-term investors with a low risk tolerance. On the other hand, if you are comfortable with high risk and the potential for high returns, you might consider investing in cryptocurrency. This rapidly evolving asset class offers unique opportunities for growth, but also carries significant risks due to its volatility, regulatory uncertainty, and security concerns. To mitigate these risks, some investors choose to diversify their portfolios by holding both index funds and cryptocurrencies. This approach can provide exposure to the potential gains of the crypto market while still benefiting from the stability and diversification of index funds. Ultimately, the decision to invest in index funds or cryptocurrencies will depend on your personal investment strategy and risk tolerance. Before making any investment decisions, it's essential to conduct thorough research, seek professional advice, and consider your long-term financial goals. By carefully weighing the pros and cons of each investment option, you can make a more informed decision that aligns with your financial objectives. If you made it this far into the video, first of all a big thank you. Maybe you have interest in one of these videos. See you next time. Bye.